Thank you. And one quick question I had was, I would have thought that the scamming component would have been something that would have fallen under the purview of the insurance commission. But moving right along, Mr. Harrell.
Good afternoon, Mr. Chairman, Assemblymember Mullen and Cooper. Thank you very much for the invitation. I'm Robert Harrell. I'm Deputy Commissioner for the California Department of Insurance for Legislative Affairs. Before I get going in my testimony in chief, I'd just like to, on behalf of Commissioner Jones, thank you, Mr. Chairman, for the partnership that we've had in working on a whole range of seismic safety-related issues highlighted by brace and bolt. You'll obviously hear a little bit more in my comments and also those of the CEA. But we appreciated you and your staff working so closely with us and the legislature and the administration on making what we view as a sort of down payment on the great need out there. So thank you very much on that. So today I'd like to provide a little information on the role of the California Department of Insurance in protecting Californians from the dangers of earthquakes, some of the things that we do, what our actions are, activities. That'll include talking a little bit about mitigation. I'm going to also talk a little bit about the market, the earthquake insurance market, what it kind of looks like, some components of that. And then finally, some rate relief, and I will touch, Mr. Chairman, on your question about what happens when there's a catastrophe, some of the things that we may do when a quake hits or other disaster. So last year, again, under Mr. Chairman's leadership, we made an important public investment in the protection of Californians from dangers of earthquakes. The governor and the administration included $3 million in the current FY15-16 budget to expand earthquake brace and bolt, and also clarified, importantly, that those program grants are income tax exempt at the state level. It was an important change that was made as part of last year's budget package. Mitigation is one of Commissioner Jones's highest priorities, and of course it takes a team effort to secure that investment in public safety. That includes some of the other folks at this table and some of the other panels that you have heard from or will be hearing from this afternoon. The CEA will come up shortly and they'll talk about earthquake brace and bolt, so I won't sort of steal their thunder on some more details about that, only to note that we're very encouraged with the notion that the demand is outstripping the current resources available. So that suggests that, Mr. Chairman, to get to your question about is the knowledge going up in the community, and I think slowly it is. That's easier said than done, but the awareness that there is some help out there, that's beginning to grow slowly. And certainly the partnership with certain cities and their building inspectors and others, that's an important part of that knowledge growth. It's encouraging, the progress we've seen, but we do realize that there will be even larger investments necessary to cover those Californians who are most vulnerable. So let me give you a sense of the scope of that. By CEA's own estimates, there's 1 million or more homes in California that are at serious risk of damage in even a relatively minor quake. Dr. Jones talked about, I think I recall her saying that really the only major quake is the San Francisco 1906. Of course, we know from damage estimates of many other quakes that it doesn't have to be an 8 or above to cause significant damage, loss of life, and severe disruption to an economy, a regional economy. So we need to be looking at the different scenarios and what we might be able to do. Many of the homes that are at risk here, they're pre-1940 homes. They have the so-called cripple walls. They're homes on hillsides. They're homes with living space over garages. You've heard some talk about these sort of soft story buildings and others that are at higher risk. Many of those obviously disproportionately fall as housing for moderate and lower income people. So there's a particular interest that we all collectively have in protecting those most vulnerable. The good news is that we can retrofit most of these homes to make it more likely they won't topple off their foundations, slide down hills, or collapse. And if homeowners do retrofit, they also can qualify for steep discounts on earthquake insurance. And that may help us improve the take-up rate, which I'll get to in a minute, but which is unfortunately very low. And one of the big factors, truth be told, in the low take-up rate for earthquake insurance is the cost of the product itself and what it does or doesn't cover. There also is, in some circles, the sense of, well, if something awful happens to the home, then FEMA is going to come in and rebuild. We know that that's not the case, of course. So it is an educational process. It costs roughly between $3,000 and $10,000 to retrofit a home against earthquake damage. So clearly those grants can help close the gap. And you means test it, for example. There's different triggers or things that the state could use if we're talking about additional state money, and if not, whether it's private money or others, ways to focus your efforts and energies most effectively. Let me turn for a minute to talk about the earthquake market, the earthquake insurance market, and our role at the department. Residential property insurers are required under California law to offer earthquake coverage for the peril of an earthquake to a homeowner. If the initial offer for earthquake is rejected, then the law also requires that the coverage be offered every other year. So there's a sort of ongoing effort to remind folks. And this is important because if you look at the historical data about take-up rates of earthquake insurance, unfortunately, you look at that chart, and that chart looks an awful lot like every spike is a big earthquake. Unfortunately, for the past couple of decades and then some, the biggest thing that improves earthquake insurance take-up rate is a big earthquake. Obviously, that comes too late for the folks impacted by the earthquake that just occurred. You look and you see Northridge. You look and you see Loma Prieta. You look and you see others. And so that's sort of a sad fact. There's a sort of increase, and then there's over time a sort of degradation. As the renewal comes up, does the homeowner want to spend X amount of dollars, in some cases quite expensive, to renew it? Are they getting the benefit, cost bang, things like that? Earthquake insurance in California is marketed in 3 different ways. The California Earthquake Authority, which was created after Northridge in the mid-90s, they've got about 3/4 of the market. You have some standalone monoline policy companies. Giovera is a good example. And then you have some companies that underwrite their own policy. So CEA is about 3/4 of the market, and those other 2 segments collectively are another 1/4 of the market. So make no doubt about it, CEA is sort of the dominant player here, and that's made up of the different insurers that choose to participate in the Earthquake Authority. Every offer of earthquake insurance has to provide coverage for the dwelling, for personal property, not less than $5,000 or 10% of the covered dwelling loss, and any additional living expenses of at least $1,500. And state law says the maximum deductible that can be charged is 15% of the policy dwelling limit. Following Northridge, CEA was established in '96. CEA is a privately funded, publicly managed entity to help California residents protect themselves against earthquake loss. Commissioner Jones is one of the voting members of CEA. There's also ex officio members representing the State Assembly and the State Senate, we should note. We're not just talking about homeowners, although that's the dominant piece here. We also look at condo owners, mobile homeowners, and even renters, although the take-up rate for renters is very, very low in truth. Under CEA, the member insurance company is required to offer coverage, and through its statutory authority, the Department of Insurance and the Insurance Commissioner oversees CEA rates and solvency. So we act to make sure, like we do really with any other insurance company, are they solvent? In other words, do they have enough resources to pay claims? And then are their rates appropriate and fair? And so there's obviously a detailed process that the department, our actuaries, and others go through with. And we partner closely with CEA when we get those rate adjustments and filings that come in. We've worked closely with them the past few years in particular. So we track the market through premium and policy count. We do a data call to make sure that we see what the numbers are, where we're at, where progress is being made, and we post those annual results on our website. Overall, the take-up rate is about 11%. That's quite low. It's even lower in commercial. I know that when Senator Monning for a while was chair of the Senate Insurance Committee, he had a couple of hearings focusing on commercial, where you can really kind of bifurcate that market into small commercial, which really looks and feels a lot more like homeowner in terms of the small business owner, maybe working with the landlord, thinking about what coverage they might be able to get or not get, can they afford it, versus much, much larger companies where they assume a lot of that risk themselves, make some of those decisions at a much broader scale level. So 11%, that's low. And then just breaking that down a little bit, Dr. Jones said even in the lower risk areas of California, it's all relative. So, for example, in Sacramento County, you're looking at, for homeowners, a 2.7% take-up rate. That is not to say that Sacramento County is without risk, but relatively speaking, it's lower risk than the Bay Area or the general Southern California LA basin. So going high to low, let's look at a couple of those areas, and I can quote off for you for homeowner market what the take-up rate is. Looking at the Bay Area, the highest is in Marin County, 16.8%. Then San Francisco, 10.5%. Alameda, 9.8%. And then both San Mateo and Santa Clara counties, 9.6%. So off the top, if you look at that high number in Marin, partly that's a resource question. You look at per capita income in Marin, value of the homes and things like that. There's some correlation there based on the data that we've seen. Switching to Southern California, looking at the LA metro area, highest is Orange County with a 17.4% take-up rate. Then you get to LA County, 16.9% take-up rate, again acknowledging how large LA County is in terms of population and terrain and things like that. Ventura, 16%. Riverside, 8.4%. San Bernardino, 7.5%. You can see the big drop-off there. So let me switch for a moment on rate relief. Because that's one of the things that we think can be most helpful in helping to entice more people to take up earthquake insurance. The Department of Insurance and the Commissioner have worked closely with CEA and other carriers to reduce earthquake insurance premiums and provide more coverage choices for consumers. Our view is that if consumers have a broader range of choices, that could help impact the take-up rate to a certain extent. Again, just to be clear, none of the things that we're talking about are going to dramatically, for example, double or triple the take-up rate. And we should not delude ourselves into thinking that they would do that, but they can be helpful with people. Recently, for example, Commissioner Jones announced a statewide 10% rate reduction for CEA policies. That became effective on January 1 of this year. That includes expanded deductible choices ranging from 5 to 25%. That will allow policyholders to customize coverage to better meet their insurance needs. So, 5, 10, 15, 20, 25% deductible. Of course, as you know, for many, many people, this is far and away the most important asset in their life. And a 25% deductible on a home that's worth, say, $300,000 is still a significant chunk of change that they're on the hook for. But we do feel it's important to give the consumer options here that may best fit their needs. Importantly, it also includes a new hazard mitigation discount program. This will give eligible homeowners a premium discount between 10 and 20% for verified retrofitting of their home. So if you retrofit, then you could also get the discount on earthquake insurance. For some homeowners, truth be told, it's viewed more as an either or. And that's just the reality of the economic situation. Some homeowners will retrofit in lieu of getting earthquake insurance. However, to the extent that people for $3,000, $5,000, $7,000 retrofit and then see the significant discount on their earthquake insurance, that could entice more people. To a certain extent, one of the things that we've seen is that people that have a high awareness here are also more likely to be thinking about other things that they can do to protect themselves. You could argue you're preaching to the choir to a certain extent, but that additional protection can serve very, very important financial and psychological and other needs for the homeowners involved. Obviously, the department and the commissioner, we encourage insurers to provide more incentives for their policyholders to add earthquake insurance to protect their property. We've worked with many of the insurers over the past few years, notifications, making sure they're clear, they're efficient, they're understandable, so that people see what their options are. As a couple of examples, homeowners that are insured with Automobile Club of Southern California and Farmers, they can now get a variable discount on their homeowner's insurance if they buy a CEA earthquake policy too. So, trying to show, you see this in other areas of the insurance marketplace where if you have your auto and your home, then you might get an additional discount. Combining earthquake insurance into that to give you a discount on homeowners insurance is important. Finally, Mr. Chairman, let me just touch briefly. You asked specifically about in the event of a disaster, and you noted that, for example, with the Seismic Safety Commission, the sort of scam artists, those are some of the things that we do in the event of a disaster. And that disaster wouldn't obviously just be limited to earthquake. We just dealt with some devastating fires, obviously. 2 of the 10 most damaging fires in California history happened last year. In those situations, the Napa quake of a few years ago, we move out with sort of strike teams. We coordinate with other state entities. One that comes to mind off the top of my head is the Contractor State License Board, for example, because you want to make sure that you have properly licensed contractors going out there. Because what happens in some of these communities that are devastated, and again, remember, the mindset of the people who've been impacted is they're at, their biggest asset is either gone or severely damaged. They're at a very vulnerable place. And unfortunately, they fall prey to scams because they're looking for something that they can grasp onto to help them get back on their feet and get their biggest asset recovered in some way, shape, or form. So we work on those strike teams. We also work closely with the insurers. We were, for example, very heartened to see the response after the 2 big fires in Northern California of the insurers being on site, being there. We were there. Many of the other entities you're hearing from today were there. That coordinated effort, it really helps people so that they feel like they're not alone and they're going to get some assistance right away. We also worked with many of the insurers on something we'd done first a few years ago in terms of claims guidelines, which helps expedite claims, because the last thing you want to see is this sort of long, drawn-out process. I think that's one of the reasons why for seismic safety, for example, they waited a while to see what was going on with Napa, because some of the complaints and frustrations that consumers or insurers may face comes a few months later. When it's sort of time to either rebuild or adjust and pay the bill. So we work very hard to try to minimize those. Obviously, no system is perfect. And, we've got an 800 toll-free number that takes in about 175,000 calls a year. Not all of those are obviously focused on earthquake, but it runs the gamut. So we're there for people to reach out, route those calls appropriately to our other fellow entities within the state. We work with the insurers, the coordinated state response. Obviously, in the case of a major emergency, you're going to hear from Tina Curry a little later on. OES kind of takes the lead, but we all work together whenever something like that happens so that we can provide as much service as quickly as possible to the people who need it the most. So in conclusion, through supportive mitigation, proper oversight of the Earthquake Authority and earthquake insurers, and efforts to lower insurance premiums to provide consumers with more options. The Department of Insurance and Commissioner Jones are dedicated to protecting Californians as much as possible from the impact of earthquakes. And we agree with the council member. It's not an if, it's a when. So on behalf of Commissioner Jones and the department, we look forward to working on a going forward basis as this subcommittee gets into the respective budgets of the entities you're going to be hearing as you get into your kind of proper sub-hearings, any way that we can be helpful to try to enhance this effort. So thank you very much for the invitation.
Thank you. Do you want to wait until, okay. Then if I can ask all of you to stay.
Mr. Chairman,
Yes.
if I might add the last question you had when I finished with my presentation quickly, I just wanted to note that our role in an emergency would be to comply with the state's emergency plan. Tina Curry will be up in a few moments, and I'm sure she'll probably address how we responded to the fire. So essentially, or the 2 fires, essentially what we do is this plan outlines what our responsibility would be, and we follow the lead of OES. We work with FEMA, the placement of temporary housing, work with local jurisdictions to help them with building and code issues, the placement of temporary housing, and then after there's the initial emergency passes, our agency is identified with the responsibility to assist with long-term recovery, and that would be in terms of both economic and housing, and that's the role that HCD has in terms of a state emergency. There's far more details behind that, but in a nutshell, that's what it is.
Thank you for that. But one of the things that I was looking for was more about the state's role. For example, in response to the first 3 panelists who were talking about the need, what are some of the steps that they've taken and how effective it's been in their efforts, where's our role in offering support and assistance? And the councilman left a little too early for me to be able to have a kind of a back and forth on exactly what kind of an incentive he was looking for. Would an individual a personal income tax program be something that works, or is it something that the money should just be made available to the state, which I guess that's what he was implying more, and to the city, local jurisdictions, and local jurisdictions to take advantage of implementing a certain program. So, in your capacity, I would have, for example, wanted to know, and we can talk about this a little longer now, so I'll just pose it now and we can discuss it later. But you talked about potentially half the housing loss, the stock being lost. What is that exactly going to mean in dollars? And what steps have we taken to offer protections or to incentivize owners of programs, whether that exist currently or that we need to be giving thought to in trying to come up with ways of protecting? So that's more along the lines of what I'd like to hear from you specifically also. But how about if we continue on with the other panelists and then... Sure, of course.
Yeah, Mr. Chair, while I have this cohort, thank you all very much for the presentation. Just wanted to, while I have you here, make a quick editorial comment. I hail from the Bay Area, and we have an affordable housing crisis, and so many of our public safety workers who would be responding to an earthquake live outside of the area because they cannot afford to live here. We really don't have an affordable housing policy of real consequence with the loss of redevelopments and programs underfunded. The Assembly Democrats will be making a push on affordable housing. So even though it may seem tangential, it's absolutely related to how we deal, certainly how we would deal with a catastrophic situation where so many of our first responders are removed from the population areas of the Bay Area. And I don't know the situation in Los Angeles. I can only speak to the Bay Area, but the numbers are striking. So I would ask for any help we can get from the department to carry the message to the governor about the need for a real affordable housing push statewide, but it is particularly acute in the Bay Area. And Robert Harrell, I first met Robert when he was working, when we were both working for Senator Jackie Spear, when she chaired the Senate Insurance Committee. And I know Robert has a real history here with the CEA and how all of that came about. So you made a comment about the take-up rate and the assumption, and I've heard these comments from my constituents that, well, if my condo goes down or my house goes down, the whole area has been completely devastated, so FEMA will come in. What will happen if there is a catastrophic event and so many individuals are assuming that FEMA will come in? What will FEMA do? What do we, and this is probably a question for our OES rep, but since you raised it and you're there, what does that look like in terms of any kind of a federal response?
Assemblymember Mullen, thank you for the kind comments. I've enjoyed knowing you for quite a long time, so thanks for your thoughts there. Yeah, I think OES is probably in the best position to tell you the details of what FEMA would or wouldn't provide. I can tell you that the distinction between, in the event of a quake, between those who did make the purchase of earthquake insurance and those who did not can be quite stark. Now, having said that, you never say never, and obviously in many cases you're relying on an act of Congress, which occasionally comes into play depending on the size and scope of the disaster. And I think anyone who sort of assumes on a certain outcome is making a very risky assumption about what Congress and any administration at the presidential level will or won't do. But there are a lot of things that can happen. I think, you triage, right? I mean, the first thing is you want to make sure that people have somewhere that they can lay their heads down. What we saw, for example, with some of the fires last year was that you had you were in areas where there wasn't quite the housing stock. And so all the places where those additional living expenses might go, the local hotels and motels and things like that, they filled up right away. In many cases, they filled up with first responders and other people who are going to be there for a while. So it's a delicate balance. But there will be assistance. Don't mean to suggest that there wouldn't be. And of course, OES can go into more detail. But consumers who have taken the step, and we understand that it's not without its economic cost on the front end, to figure out a way maybe to mitigate, or if they're in that appropriate housing stock, or try to purchase earthquake insurance, they will see a significantly faster and better outcome on the back end of, heaven forbid, whatever disaster might occur. And I realize that's probably not as detailed as you're hoping for, but there are lots of entities that can do lots of things. But it's a product that, if something happens, can make a big difference.
And I just wanted to make a quick introduction. I'm glad Mr. Canculi is joining us. Since this is an informational hearing, he does not serve on the committee, but glad to have him take part. Thank you very much. Thank you. Should I make a comment?
Well, at the risk of jumping in on seismic safety issues, in general, when you look at the trend in federal government, they started holding the line on what the feds come in with. The Congress has sort of held back funds after some of the big earthquake issues. In the realm of housing, you get an interesting phenomenon that a lot of housing has been purchased with mortgages that have gone through the secondary market. And so then you get the GSEs, the government-sponsored enterprises, Freddie Mac, at the national level, they have some exposure to the peril of earthquake. The rule of California law since 1983, if you do not purchase earthquake insurance, you do not have coverage against the peril of earthquake. And so if there's no fund for recovery on the insurance side, these structures with these mortgages are sort of a peril to the secondary market. And in the last 20 years, the federal government has shown more interest in the ability of the secondary market organizations to be a source of federal budget risk. So you never know. There may be a move to kind of find a financial solution just so that the secondary market is stabilized. So the lack of insurance can bring risk into the system, which might create a national interest in trying to backfill. Condos are a different problem than freestanding single-family dwellings because of the intermingling of private and common ownership. We have passed a resolution last year, I guess, recommended to the Congress a way to kind of stabilize and strengthen our own earthquake insurance system. The year before, we improved the language of the earthquake offer, so it was not so arcane and abstract, in the hope of improving the take-up rate. We've done that here in the legislature, and then we passed a resolution that kind of went into the history of the use of pooling mechanisms in California to urge the feds to help us out with our pool a little bit, which is, anyway, these are hard issues. We've done a lot in California to break new ground, but it's perilous.